Hello number-curious friends, welcome back and welcome to new joiners. You've learned double entry in T accounts, but how do we know all those debits and credits still balance before we publish financial statements? The answer is trial balance. Try and balance. A trial balance is a list of every account from the general ledger and their ending debit or credit totals. Add the debits, add the credits. If they are equal, your books are arithmetically correct. Where does the trial balance sit within the accounting cycle? First, we have journal entries. Basically all entries which run through the systems, received invoices, sent invoices, cash movements in bank accounts, etc. Then we move to posting the transactions to the T accounts or a ledger, as we did in the previous lesson. Then comes the trial balance. After we set up the trial balance, we may need some adjusting entries for items which may not be captured by initial bookings, for example depreciation or accrued expenses. At this point we arrive at an adjusted trial balance, which is then the basis for the preparation of financial statements. Let's have a look at our Apple Shop ledger from the previous lesson and add a few more items like not yet settled accounts receivable and payable, a loan, a truck, some more expenses, etc. We list the totals from the T accounts after 1 month, like this. And a comment here, accumulated depreciation means the sum of all depreciation expenses we have recorded to date for our truck, meaning how much of it is already depreciated in total. When deducted from its initial value, 10,000 in our case, we get to the current remaining value of the truck. Now let's build the trial balance. In step 1, we list every account exactly once. In step 2, we copy its ending debit or credit total. In step 3, we add both columns. Debits equal 11,530, credits equal 11,530, balanced. What does a balanced trial balance prove and what it does not? It proves that all journal entries followed double entry. No single-sided posting. Ledger math is correct. But it does not guarantee that account classification is right, for example expenses versus assets. It also doesn't guarantee that amounts are accurate, you could debit and credit the wrong numbers equally. And missing entry errors. If you forgot both sides, totals still match. What would be common errors that trial balances catch? Transposition errors, where you mix the numbers, for example 45 versus 54. Slide error, where you record, for example thousands instead of hundreds, 1,200 versus 12,000. Debiting one account twice and skipping the credit. Posting debit or credit to the wrong side. After preparing the unadjusted trial balance, you may need to set up an adjusted version of it, for example. Add accruals, for example utilities consumed but for which the invoice has not been received yet. Also depreciation, amortization, interest, prepaid expenses adjustments. The adjusted trial balance is then the direct source for the income statement and balance sheet. For example, in our case, let's add depreciation of $20. There was no invoice for that, and it was not yet booked, or let's say we forgot it. That adds the same $20 to the accumulated depreciation. Our totals increase by 20 each and trial balance still balances, 11,550 on each side. So, your trial balance is an internal worksheet which lists all accounts but doesn't sort or structure them by section. Later it is converted into balance sheet and income statement, which are external reports sorted into order with proper categories and subtotals. We will look into that in the next lesson. Think of the trial balance as the rough draft, and financial statements are the published book. Let's now have a look at a mini case how you can spot errors via trial balances. Let's imagine your totals show debits 11,500, credits 11,600, off by 100. Let's run a short checklist to locate an error. Divide difference by 9, any transposition? Yes, that's how you spot transposition errors. Simply divide by 9. 100 divided by 9 is not an integer, no transposition. Next, divide by 2, maybe a single side posting? 100 divided by 2 equals 50. Check recent $50 entries. Scan the ledger. Yes, rent expense of $50 was posted on credit instead of a debit. Reverse and repost. Trial balance now levels. Today, modern accounting software is a huge help with trial balances and auto balances almost everything. But we, ordinary humans, still review unusual balances, scan big swings month to month, confirm all required accounts exist and there are no plug numbers. So we do still have something to do. Let's summarize it briefly. Trial balance is a credit-debit checkpoint. Balanced totals do not mean error-free books, but it's step number 1. Run an adjusted to adjusted trial balance before creating financial statements. No quick tricks to spot and fix imbalances. So, now you can build and troubleshoot a trial balance like a pro. In the next episode, we'll use that adjusted trial balance to craft the full income statement and balance sheet. If you found this lesson helpful, tap like, subscribe and ring the bell so you don't miss the next lesson. See you soon and keep those debits equal to your credits.